This week, ULTY paid me $125.90 in dividends. And yes, my entire paycheck is still inside. But here's the catch. I'm also paying now margin interest every single day. Let's break down the full thing.
Here we go.
Welcome back, dividend stackers. If you're new here, this is the ULTY YOLO channel where I document one single ETF, ULTY, and I show you everything, the good, the bad, everything week by week. And a quick reminder before we dive in, none of this is financial advice. This is just what I am doing with my money inside of ULTY. All right, let's get to the numbers. This week, ULTY paid me $125.90 in dividends. That's just 1 week. And here's the cool part. I drifted and reinvested and bought an additional 23 more shares at $5.44. That means my share count went from 1,379 to over 1,400. And those extra shares will now keep paying me more dividends every single week. Also, this week's dividend wasn't ROC or return of capital. It was actual income. That matters because it shows the fund is paying me from what is generating, not just recycling money back to me. As you can see, ULTY this week paid 0.0913 cents per share, which puts us at a distribution rate of 87.23%. So 1 week, $125.90 in cash flow, compounding into more shares. Let's see how that affects the big picture. Here's the portfolio snapshot as of October 2nd. My cost basis is now sitting at $5.81. My break-even price is $5.35. And the current market price at the close of Thursday is $5.47. I own 1,402 shares of ULTY, and the market value sits at $7,669.01. Now here's the key part. My unrealized P&L is sitting at a negative 5.86%. or a negative $477.71. But once you factor all the dividends I've received, $639.58 so far, which is lifetime, my true gain including dividends is actually a positive 2.16% or $161.87. So yes, my portfolio is down on paper, but the dividends have already pushed me back into positive territory. That's the power of weekly compounding. Now let's talk margin, because that's a big part of the ULTY YOLO experiment. Right now, I'm using $2,893.13 of margin debt. That's basically borrowed money from Robinhood to help me scale faster. The daily interest cost on that is 29 cents per day, which works out to about $2 a week. So here's how I see it. I'm paying Robinhood $2 a week in interest, but ULTY is paying me over $125 a week in dividends. That's a trade-off I'm comfortable with right now. My equity is sitting at $4,775.88, and I got a buffer of $2,480, which is about 52% safe zone before I'd risk a margin call. So I'm not running on fumes here. I got some breathing room. And real quick, if you're getting value or just simply plain entertained, hit the subscribe button so you don't miss these weekly updates, and drop a comment that you subscribe down below. I'd love to shout you out in the next video. So next up, taxes. Can't forget about Uncle Sam. So far, my after-tax dividends this year are $571.54, and I estimated an additional tax due around $68. That's money that I'll need to set aside at some point, but again, this week's payout was all income, no return on capital, so that makes the tax math a little more straightforward. Bottom line, after taxes, I'm still keeping the majority of what ULTY is paying me. Now let's look at the transactions. You'll see $3,600. My whole paycheck was deposited straight into ULTY on September 25th. And then every week since, the dividends have been dripping right back into the fund. This week, that $125.90 payout added 23 shares. Last week, it was 22 shares. The snowball is starting to build. And here's something I did that I think is smart. I moved $98.65 back from my spending account into investing, because why pay interest on margin if I don't need to? Every dollar I move back helps lower the daily interest costs. And here's where it gets exciting. On the monthly chart, my net dividend started at $13 in July, then $171 in August, $329 in September, and now $125 just in the first week of October. On the weekly chart, you can see that the income line climbing steadily up. If this pace continues, We're talking about hundreds of dollars in weekly cash flow from stacking up by the end of the year, and that's all coming from one ETF, ULTY, my entire paycheck behind it. So to wrap up, the portfolio value is sitting at $7,669. The cost basis is $5.81. My true gain, including dividends, is a positive 2.16%, and my margin cost per day is 29 cents a day. Lastly, ULTY just bought me an additional 23 new shares this week. Now, question for you, would you ever put your paycheck into a single ETF like this, or would you use margin to pay bills if it meant your dividends could cover it? Let me know in the comments below. I want to hear what you think. And thank you all for watching, and a huge shout out to everyone who's fueled the grind with buying me a coffee. You're literally powering these spreadsheets like an energy drink. And remember, none of this is financial advice. This is just what I am doing with my money inside of ULTY. Until next time, ULTY YOLO out.